All right, good morning, guys. Tuesday morning pre-market prep. Question right now, are we extended? Right, we know, guys, these names, Amazon, Tesla, Google, Netflix, you name it, it's been an all-time high party. And things are just going pretty freaking nutty right now. So while personally, myself, I'm sure a bunch of y'all have been enjoying the momentum here, obviously at some point, guys, the question does come up, are we a bit extended right now? So I'm doing the swing trading class right now, and one thing that we're discussing early on here, guys, is the 21 EMA. And this is kind of the moving average that I use, serves as the foundation of, not only my trade decisions, but my view on the market as well. So my little rule of thumb, guys, that I've been taught over the years is that once a stock is 3 to 4 ATRs away from the 21 EMA, doesn't mean that it can't continue to go towards the upside, but the probabilities are slowly starting to lean towards that momentum beginning to die out. Maybe it doesn't mean a complete reversal, but essentially running out of gas. For y'all who are unfamiliar, ATR is the average true range, and that just measures the average move a stock has been making over the last 14 days, up or down. So when we get about 3 to 4 average true range moves away from the 21, we can continue to see the move going, but as a general statement, guys, it's tending to get a little bit far done. So, if we look at the QQQ right now, the tech index, we're 3 average true range moves away from that 21. In comparison, the SPY is only about 1 ATR away from the 21 EMA. So it's pretty interesting, guys, that tech is a bit more far gone here than the rest of the market. So obviously, we look at these names who've been going wild, like Amazon. We're 4.5 ATRs away from the 21 EMA. Look at something like Big Google here, we're 2 ATRs away. You look at Tesla, who's gapping up again this morning, you're 6 average true range moves away. Even these semi names, guys, something like Nvidia, 2 ATRs away, LRCX, 2 ATRs away. So I'm not, saying this here to say that the market or to say that these stocks are, going to begin to reverse. But it's some context that we should have right now as traders, right? These moves have been so sweet. It's been relatively, easy money. And it's kind of easy, guys, to get caught up in, that euphoria, so to say, where every day we're waking up in our Amazon, our Tesla, our Apple, whatever the hell we got, just keeps moving higher, higher, and higher. That's fun while it lasts. But like everything, guys, it does come to an end at some point. At some point, we're going to come back and get that reversion to the mean, right? No matter how far we run, no matter how strong it is, at some point, you tend to get that reversion to the mean. And the probabilities just begin to rise, guys, that you're going to get that reversion to the mean once you're 3 to 4 ATRs away. So, could we continue to run? Absolutely. Should any of us be surprised if the market begins to come in a little bit, and the Netflixes, the Googles, the Teslas, etc. begin to come in a little bit? Based on what we're talking about here, we shouldn't be surprised at all. So take a look at the futures this morning, guys. We're down almost 1%. What would look like a significant drop down to the 21 would really just be that normal, typical, healthy pullback. So these are things for y'all to keep in mind. One more thing to keep in mind, though, kind of what I think is an interesting observation, guys. We're coming up on earnings season, right? Where Amazon here has earnings in a few weeks for the quarter. It's looking a lot like last quarter. Right? And if y'all remember last quarter, Netflix's, Teslas, the Nvidias, the Amazons, the Googles, you name it, everything was getting pumped up like crazy into earnings. As the big money guys is basically pricing in any sort of relatively good news that they're going to expect from the earnings announcement. So they get pumped up like crazy into earnings, then earnings comes out, and we basically flatline because everything's already been priced in. So it is a little bit interesting that the Amazons, Googles, everything basically is running like crazy into earnings. We'll have to see, guys, not only if that momentum continues into earnings, but if we once again just basically go flatline after the earnings announcement. These are a few big picture things to keep in mind, guys. I wish you the best of luck throughout the rest of the week. If you haven't already, please go ahead and subscribe, and I'll talk to y'all in the next video. Stay safe today. And for those of you wondering, I've got one open position here this week. Got a put credit spread early yesterday morning on Amazon, shorting this Friday's expiration 28.50 puts. So the move is off to a really good start, guys. Obviously yesterday as she ripped. And, I'm pretty comfortable with this position. Max profit is about $2,200. And given everything we just discussed, where everything is a little bit too far gone right now, I'm not looking to get too more aggressive here this week. If I can ride out Amazon, collect that premium, I'm more than happy, with that, guys, here this week. When everything is just kind of a bit too far gone for my personal trades. So if we come now, take a look at Amazon, right? You can see we're up about $600, guys. So call that, 30% or so of max profit. At the close yesterday, it was about $800-900. It changed after hours, but nonetheless, guys, it's all about collecting that premium. So you can see those puts out here still got a good $4 or $5 left to them, but we're looking good. So that's about it for me, guys. I wish you all the best of luck. I'll talk to you tomorrow morning.